Futures trading involves substantial risk of loss and may not be suitable for all investors.
Well, it's time for Markets on the Move, and I have with me Oliver Sloup of Blue Line Futures. Of course, I'm Marlin Bohling, and hope you're having a good week so far as we start out a brand new week. Grain markets today, I'm looking at the rundown here, and it looks like green all across the screen. It wasn't always that way during the trading session here, but on the corn, I see it closed basically at the high of the day. So why the encouraging signs in the grain market to start out the week when harvest is getting more and more active out there?
Well, I think there's been a lot of technical developments over the last couple of weeks in these markets, most notably for the corn market after you and I have talked about it for the last several weeks now. Bottoming on bearish news is what we call a fundamental rejection, and we've been able to mark higher lows and higher highs since that last WASDE report. Now we've got another one coming up at the end of the week, so potentially you're just seeing some momentum and positioning ahead of that. I think overall, looking at this chart, it remains very, very constructive, as I mentioned, with that series of higher lows and higher highs. We tested and held the 50-day moving average in last week's lows almost to a T in this early morning trade, and then we're able to finish at the upper end of the recent range. If we can get out above 525, I really think that could potentially spur some additional momentum. And if you look back over here on the chart back to July, there's a little bit of a gap just above 430. So if we're able to get out above 425, I think we can tack a nickel on in relatively short order and see that gap at least get partially filled here in the near future.
Well, I know in this part of the Mid-South, the harvest is basically about in full swing already. I just wonder what kind of feedback you're getting from people around the Midwest. How far north are we now in what I call the harvest front?
Yeah, it's picking up every single day, and that's going to continue to be the trend here in the coming weeks. All in all, from what we've heard, it's fairly underwhelming. And that's not to say it's really, really bad corn by any means. It's still good corn, but I think the expectations were just set really, really high. And at the beginning of August and at the end of July, things looked exceptionally better. And then that was kind of the high for yield projections, I think, in a lot of areas, in a lot of cases, and that's kind of been walked back and watered down a little bit, and I think that's probably why you're seeing some of the rally in the corn market as well over the last couple of weeks, is just kind of bringing those expectations back down to earth a little bit here as those combines do continue to pick up their harvest pace going forward.
Now, what system are we looking at here? This chart that you have pulled up for the corn, what system is that?
This is our Blue Line Edge platform. It's complementary to clients, and it's a desktop and mobile platform. Very, very user-friendly. I've worked with a lot of farmers, end users, etc. for a long time, and a lot of people may not be familiar with the modern technology, but they can pick this up same day in a lot of cases. So very user-friendly, and then we've got a team here that's ready, willing, and able to help get adjusted to that as well. You can either use it just for charting, watch live quotes, or place trades from it as well. So very, very user-friendly. Great tool to have in your back pocket.
So what is that we're looking at? Is that like a 50-day moving average that we're just hovering around?
So the red line, yep, the 50-day moving average. Again, we tested and held that here over the last week or so. Again, we held last week's lows as well. And then we're able to use that as support. Below that, you've got more trend line support from these lows down here, as well as the purple line, the 20-day moving average. So the way I would be looking at it, since I have a bullish bias, is you're going to be looking potentially with a bullish bias, buying the 50-day moving average and being ready, willing, and able to add to the position down at trend line support. Now, if you're short and have a short bias, obviously you're going to look at this chart a little bit differently. But if you're bullish, those are the levels that we're looking at to kind of position to the long side.
Now, looking at soybeans, it looks like for a while they looked like they were going to have kind of a tough go, but by the time they wrapped up the day, they were close to the high of the day too. So did they pull that thing out of the fire or what?
They got saved by the skin of their teeth, that's for sure. The soybean market has been looking very, very suspect over the last 3 sessions now. As you can see, we're testing that red line again, that 50-day moving average. That seems to be a common theme for a lot of these grain markets recently. That also represents the 50% retracement just below there at 1022. And when we're looking at the 50% retracement here, we're looking at the lows from down here in August and the highs from here in August as well, and that comes in at 1022. A lot of technicians kind of use that as a point of support, and we've been able to hold that as well as the 50-day moving average. A break and close below that, and you can see there's some error on the chart. So we avoided disaster for now. Below 1022, there's really not a whole lot of support until you get closer to $10. Does that mean that we're in the clear and this market's going to rally back towards the highs? And not quite yet. I think the bulls still have some work to do, and that starts with getting out above that purple line, the 20-day moving average. If we can do that with consecutive closes, potentially we get back towards the upper end of that trading range that we've been in or seen throughout the course of the year.
Well, the gold star goes to the wheat market on Monday here, and that thing has just been in a grind going lower ever since about mid-June or something like that. And it's like everybody was waiting for someone to throw it a lifeline. And you have a saying that kind of applies in this case here, related to the fact that the market has just been so dull lately.
It has been very, very dull, and you're right. We really started just grinding and bleeding lower in the early part of July, and there really hadn't been a whole lot of reprieve until the last month or so. It hasn't been a bullish market over the last month, that's for sure. But as you can see here, we've just been consolidating and trading mostly sideways to a little bit lower. So it's been a very, very quiet market. And I remember when I first got started in the industry, the old saying was never short a quiet market. So I think the risk reward skews to the upside here in favor of the bulls, but we've got a lot of technical work to do. At the upper end of this range, you're looking at about 530, 535. That's what the bulls need to see to really spur this market higher and get participants excited again. At the very least, encourage some short covering from the funds who've held a net short position for, about 3 years or so. I've mentioned options. I think this is a great environment for options. Volatility is at about the lowest levels in wheat since 2019, 2020. So if you're looking for limited risk upside exposure, I think options market is a great place to look. If you're looking for specific strategies and ways to play it, our trade desk is always available to help kind of put something together that is suitable for you.
Do you consider livestock to be a quiet market now?
It is not a quiet market by any means. It's still relatively choppy. We're still trading in pretty wide ranges. Last week was a notable change. It was the first lower close in live cattle since I believe June 16th. I have to go back to my notes here. So the first lower close of the quarter on a weekly basis, and potentially that starts to turn the tide a little bit. Not to sound like a broken record, but here we've got the 20-day moving average coming into play again for this commodity, as well as trendline support. And for the December contract, that comes in near 236 area. Break and close below there. Potentially you start to maybe spark a little bit of long liquidation and profit taking from the bulls who've really enjoyed a nice rally throughout the year.
Do you think that possibly the bulls are getting lulled to sleep as we get into the fall period now?
It certainly does feel like that, and looking at the fund positioning as well, you can look at the weekly commitment of traders report. It seems like that's been the case for the last several weeks, where the holding net long position for funds has just been really stagnant around 125,000 contracts over the last several weeks for that live cattle market. And if we do start to see cash soften up, potentially that's the trigger where you start to see a little bit more movement in fund positioning, and that could trigger some long liquidation there as well. But again, the cash market has been underpinning this bull market and strong demand. If that starts to maybe quiet down or even soften up a little bit, that's going to be a little bit of a caution flag for things to come.
So on the other hand, it's like lean hogs are kind of taking the baton and running with it now when the cattle are kind of cooling off a little bit.
That's exactly right. We broke out above that wedge that you and I talked about a few weeks ago, out above the major moving averages, and just almost tagged those contract highs from back in June on Friday's trade. A little bit of a retracement in today's session, but all in all, no technical damage was done. And I really wouldn't be surprised to see this lean hog market continue to work to the upside. I don't think it'll be a straight line by any means. But if these high beef prices do remain intact, I think you start to see consumers potentially look to alternatives, chicken and pork, et cetera, being the two ones that would, I think, pick up a lot of momentum from that.
Well, if you want to talk about a market that's anything but quiet, boy, if you look at the precious metals right now, That's in a whole different universe, kind of all by itself.
Yeah, absolutely right. Gold here. We've got the December contract pulled up, and we just continue to mark new highs almost every single day. It seems like long-term gold bull here, but it is really tough if you don't have any exposure on to chase it up here. We are very, very overbought. I wouldn't be surprised to see us maybe see a healthy retracement. A healthy retracement, I think, would be back to a retest of this breakout point, 3550, 3600 area. I think that would be an interesting spot to see what the market does going forward. And then silver, similarly, we've got a big breakout trading to, I think, the highest level since 2011. So a lot of momentum going for the metals. I would like a healthy retracement and some consolidation before having another leg higher.
Good stuff. All right. Well, if our viewers out there want more information, I'm sure you can talk with them directly. But you have a whole bunch of people on staff that are very good experts in their particular different fields. You cover not only grain and livestock, but also precious metals, equities, all sorts of stuff, right?
That's right. Grains, livestock, precious metals, indices, energies, etc. You name it, you've got it. We work with obviously a lot of producers and end users on the hedging space, but a lot of people that speculate in the markets as well across different asset classes. So we've got a lot of people in house, as you had mentioned, who are ready, willing, and able to help. So don't hesitate to reach out. Our number 312-278-0500.
That would be awesome. All right. Well, thanks for the update as we start out a new week. Good to have you back again. And I guess at this point, we will check back in with you again on Wednesday. We'll see how things are doing at midweek. So for Oliver Sloup, I'm Marlin Bohling, and we'll catch you next time here on Markets on the Move.